US 30 here, and the move that we've had down through here, we're looking at this as wave one. Yes, it can be an A wave, but the main point is that we do have a 5-wave structure in through here, so we'll be looking for anywhere between a 40 and 60 odd percent retracement level back up here for wave 2 or B, and then we'll be looking for a move down through here. Obviously the 15,300, as you know, is a top of minor group 1, and support or resistance on this level here is critical. So we can expect 3 waves through here as such. We've got it here. Okay, so yeah, three waves through here, but if support is found on the 15,300 after 3 swings, then it's a positive market as such. But as it stands at the moment, we're counting the 20-minute chart on the same thing, so we're looking down for wave 1, 2, 5 waves down for 3 here, the 1, the 2, the 3, the 4, the 5 for the 3rd wave, the 4th wave pulling back to the 4th wave of 1 lesser degree, and then the 5th wave rolling down here further for wave 1. And the correction through here, this is the 61.8 retracement level through here, and the 15,300 here, so this is support or resistance, you know, is important for short trade setups. If you're unsure, then the 15,250 would be, well, could be used at that point there. This particular move up through here, corrections are the weakest link in Elliott because they can simply sort of double in size really. So this little A, B, C here for the A wave here, and the B wave here, and the C wave up through here for this little, that would be sort of completed in there as the 1, the 2, the 3, the 4 and the 5 there, so for the C wave as wave 2 there. So that can very well be completed at that point there, but we must sort of understand that with corrections they're a bit of a tricky little sucker, so we need to also understand that it just may grow in size. So that ABC that we're looking at here, that could just be the A wave there. We could get a B wave to here and then a C wave to there and then roll over. But however, the size of this one here is kind of, you know, it suits this size here. There's obviously the 60-40 relation, the golden mean, the golden ratio 61.8. I just call it 60-40. Seems to sort of play out quite sort of nicely there. So it's got the right sort of look and feel for it to fail at 15.3 there. So let's just see how that sort of plays out at that point there. All the other markets are the same. This is the S&P 500 here. So it doesn't really matter if we've got this as an A wave, a B wave back up, and a C wave coming down, or down for 1, back for 2, and then down for 3, 4 and 5. Of course, this being an impulse wave, which is our sort of priority as a wave 1, is sort of dominant at this stage. But over the next session or two, we will, in both counts, we'll see this as in 3 swings. It's after the 3 swings. This is the medium level here, the 1650, and it will play a medium term sort of strength view within this space here. And of course, the group 1 here, 30, 20 and 10 will act as support, and of course group 2, as always, would act as resistance, and that would offer the range here. So I believe in a session or two we should be able to work out if we're getting the 3rd wave down, and that is the bias at this stage in here. The European markets are the same as well. So when we look at the FTSE here, the same situation here in terms of, I mean, the FTSE was down 2% last night. Well, of course, that's just following, the Asian session and, picking up from what the US had done. So, it's not really a big deal. It's just catching up in terms of, the globe spinning. So the 5 waves down through here are nice and neat and tidy. The wave 2, the 3, the ABC for the 4th here, and down for the 5th here. That may be able to be counted a bit differently, but that's fine. It's not that it makes any difference. So we're looking for an A and a B and a C wave back up here. So you can see that the FTSE is not as much not further. The US indices are developed further because they've already moved up further to the 50% mark. So these are still quite low through here, but we still expect to break higher. But once again, that could be the A wave there. That could be the B wave here as a triangle, because triangles occur in B waves or wave 4, and then the C wave up through here. So don't expect it to, come back up here. I'm just, just doing the textbook thing there, and it is possible, fair enough. Any long trades can be based off the 6-7 through here. The 72 numbers in here, a bit of hiding away in the 6-7-2 little area through there. But in 2 sessions, we expect this to roll over one way or the other. The Australian market, I might just go to the banking sector here for a second. This is not the XFJ, the financial section, but the XXJ, the banking sector. And also we're at a medium level here too at 6,500. I just call them the 65 number, as is the S&P 500 at 1650. So the 65 is in there. So, but the sort of interesting point through here is that, just get that off there, is that this move that's down at the moment obviously is down in 3 waves, yeah? Excuse me. So that could come down further as well. But the point here is that so far this is in 3 waves. So in Elliott terms, that's corrective, and when it's finished, then we would see a move to the upside. Okay, that's how that would be. However, if this 3-wave structure here turns into 5 waves, the 1, 2, 3, 4, 5 like this, and there's support in here at the 62 there. The 62 is important because it's a bit like when you're talking in geometry, it's pretty much the golden mean or the golden ratio, so 61.8. So, it has bearing there. It does show up on that number. So it's worthwhile sort of noting that. Just a bit more information about numbers. But look, main point, if we get 5 waves down through here, then we would be looking for a 3-wave retracement, and then would be looking for a further 5 waves down. Now, that retracement could come to there, or it could be a larger retracement back up to the second supply area up here, and that's why normally the 61.8% works as such, because of just where the volume is sitting basically. So yeah, it's all bits like it's a psychology basically. But look, if we get 5 waves there, then we're going to be getting another 5 down. As simple as that. I'll put that in the middle there, just the break even ground. So we'll be looking at a minimum of that. Okay. Now that minimum there which would be just a corrective process across the 65. And normally the way that I see these sorts of things as well in terms of working with the levels is the arrival, the reaction, the support, and the first high above the level, and then the correction starts. So I would normally see it like this, depending how high if this is a higher retracement here, that means the market's stronger. If it's here, then it's weaker, and we'll see lower ground from that point. But I'll just pop it there for the time being, and then we'll see this here. So this would be viewed as a sort of a larger ABC correction. Now I'm working on this banking sector because obviously the banking sector's the leader. So if we're going after this correctional pattern, then if the market is going to push up, then it's going to be leading from this area through here. So understanding the pattern across here, either in Elliott terms or trading level terms, would be the arrival, the reaction, the first high above the level, then a correction in 3 swings, and then looking for support on here. So that's the timing to buy over here. Yes, if you've got your grey cells working, well then you can pick it up a little bit earlier through here. But understanding this process here is, I call it the classic pattern, is important because it just it saves you time, and time is money. So you normally exit at a level, then you wait for the correction, wait for the process to unfold. There's a whole lot within the process, in the corrective process, and then you would enter back over here. And in the meantime, while this is going on here, you go find another market. And it's important to do that, because if you're lucky enough to make money in a trend, then you need to take the money at the number and go away, because if you make money in a trend, people normally give it back in the correction here, because they've created attachment to the asset, and that can get you into trouble, as fear and greed cut deep and need controlling. Okay, so that's enough said there. This is the ASX CFD through here, and the important thing here is that the move down through here has really breached our, I can't remember what we called yesterday, the 5100 anyway, or the 5120 or whatever. So it's clearly sort of breached through here, and it's likely to overlap the wave one top of wave one structure here at some point in the next day or two, after we've got a rally through here, retesting of 5-1, and we'll probably get a thing here. But point being is that that's come down quite a way through here. Now there's one way to look at it. We've got this as the 1, the 2, the 3, the 4, and the 5 here. That fits best now because of that's moved down through here. Of course, we could look at this as being a whole wave 1 up and not wave 5 here. And if that's the case, we would get 5 waves up for 1. A retracement of 61.8%. So from the low here, the 56% retracement here is in the 5,000 to 550 area through here. And if that's the case, then we would see a move up from that point there. However, if we do get the 5 waves down through here, as we do in the banking sector, then we'll get 3 up, and then we'll get another 5 down, which is more likely in this case, and that's what we're looking at through there. So just drilling in here a little bit, you can see that there's a couple of ways to count this here, but either way that you count it, is that this is the beginning of a trend, isn't it? The beginning of a downtrend, because we've got this move down through here. This is the most powerful point in this trend here. So the rest of this down through here, as it moves into 5,000, will be pretty much a reverse image of this. So we can see that there's large retracements and overlapping wave structures, and normally they're wave 4s, so that's what we'll be seeing in here. So we can count this as a wave 3 here. So we'll probably count this down for 1, 2, 3, 4, and 5 down into this area here. But then there's still the 4s and the 5s to go through that period there as well. So just looking in it a bit closely through here, I've just counted that down as wave 1 to here, in terms of sort of forgetting about that spike there a little bit in terms of 1, 2, 3, 4, and 5 down through to here. That's one way to count it. The other way to count it is from here down 1 and 2 through here, and then the third wave moving down through here. But either way, we'll get this wave 4 coming back to the 38.2 retracement level, which is the 5-1 here, and also the bottom of this trend line through here, or the channel line. So we can expect resistance through here. This is looking rather impulsive, I have to say, in terms of structure. So and being a wave 4, so we may just see an A wave, a B wave, and a C wave moving up through here. So a bit time consuming through here as well. But if I've got this count wrong here, then it would be down for wave 1 here, back for wave 2 here, in the bigger picture, so to speak. So I could put wave 1 here and wave 2 up through here, you know what I mean? So, but we'll see that. We need to line this up. But this market is weaker than, and started to become weaker before the Dow Jones become weaker. So there's, this is sort of leading the way here. So you're not going to get any leads, so from the US as such through here. But look, anyway, a bumpy ride into lower ground over here. Let's have a look at commodities. Okay, I'm going to start with BHP in Australia this time rather than copper. I'll get to copper in a minute, but the 5 waves that we've been tracking to the upside through here, the wave 5 from here, wave 4, wave 5 up through here is normally, because we've got the extension in wave 3, so normally wave 5 and wave 1 are about the same. So, somewhere in here we can expect that. So we're basically looking, I've drawn that in 3 waves here, as you know, but look, the bottom line is that this market can pull back to 61.8. It can move all the way back down through to here. So in the 50-60 sort of range over here. I don't know what's going to happen. It's going to depend on what we get in the pullback with the indices and also the US dollar as well. But the main point here is that we're slowly moving into the second setup through here. So if you bought the bounce in this area here, as we're sort of mentioning, and giving it space to move, then this is the time to take the money here. And now let's just see how this goes. I don't have any sort of answers. Let's see what sort of thing develops here and what else comes into the other markets as well, and we'll take it from from that point there. So when I look at the US BHP here as such, and look at this one here, it appears much more corrective in here, which is a little bit of a concern here. I mean, we probably could get a 1, 2, 3, 4, and 5 to here, and an A and a B in here, but it's not clean. It's not it's not that good. And even when I look at Rio as well, if I just bear with me here while I have a look at Rio while we're here, Rio in Australia, of course. So when we look at its pattern through here as well. Sorry about this, getting into shape. From its low through here, its move up through here is clearly in 3 waves, isn't it? It's corrective, and this would make a nice short through here as well, because this little pattern here is corrective as well. So obviously the medium, the major level down here is 50, would be on the cards, but always a bumpy ride through Group 1. But this is clearly corrective here, so you can see why I'm in a bit of a tizzy about this sort of nice 5-wave structure we got here. So the other half of the market saying it's corrective. This one here is saying that it's impulsive. Actually, let's just have a look at the XMJ, the materials sector, which would be the same as sort of BHP as well. No, it's not quite. Okay, so it's corrective here as well, this move up through here. So we could say that, a breach of this one here, giving us overlapping wave structures of this one here. So if that was wave 1, wave 2, wave 3, wave 4, that's cool. So we'd need to see a wave 5 up through there, but we're not getting that. This is just the general gist of the whole material sector. So look, if that comes down through to here, then we know this is corrective, and there's something maybe wrong with the BHP count on the Australian market. So just bear that in mind. But when we come and have a look at copper here as well. So I'm just going to stay with the intraday thing here. This move down through here is in 5 waves, okay? So I have to kind of forget about all of this for a moment because it's got too many options in it, really. So this move down through here should see a counter trend back up in 3 waves. So we should see some sort of A, B, C correction through here, and then we should see another move down as such here. If this moves down below, just shape that up there a little bit. That gives it a bit of form there. If it takes this low out through here, then it's obviously got a much bigger bearish pattern unfolding at that point there. So we could still very well have a top in this place here, and it really is still all about the 330 becoming the support or the resistance, and obviously it's being tested at the moment. So we need to just observe that test, and the test will come in 5 waves down, 3 waves back up, and 5 waves down. So it could follow stock again as well. So that short in Rio could be on the cards. Don't overdo it, because we still need to see a bit of development here. This can go sort of either way here. So anyway. A little bit confusing, but you get the sort of general idea. Just needs a bit more thought to it. The gold market as such, where are we here? Okay, so we were looking at, find a bigger picture here for a second. Okay, so we were looking at, this is a little bit like the euro as well, actually. We're looking at, we had a nice 4-hour chart. We had nice 5 waves up through here, so the A wave. down into the B wave and up into the C wave here. Bit of a spike from the Fed's thing, whatever. So wave 4 here. So wave 4s can be sideways and complicated, so they can get, it could get sort of a bit messy, but the way we were seeing this with wave 4 here is down for wave 1 and back for wave 2 here, and then wave 3 coming down through here. So with that in mind here, this is what we're looking at here, the A, the B and the C here for wave 2. But we also have to be mindful as well that things just don't expand on us. And what I mean by that is that that's the damn nuisance with wave 4. So if we put that there, getting a larger ABC correction in this way here in terms of an A and a B and a C wave up through here. I don't think that's the case just yet, but with Elliott, we always need to put all the possibilities on the table, explore all the possibilities, and then eliminate them one by one. So that's what we have to do. So as it stands at the moment, this is a nice ABC rally through here, and then we've got down for 1 and back for 2 here. So if that 1372 becomes a resistance there, then you can short from that point there. You may get away with it at the 1380 there as well. But this move up through here, we just need to be mindful, because it can also be 1, 2, nice third wave up here, nice fourth wave back through here. So we may get a fifth wave through here. If we get 5 waves up through here, then we'll get an ABC across here and then further upside through there. Now, gold seems to be following stock. So to me, that's in a fear-based mode. It's not sort of standing on its own. I mean, precious metals can run with indices for 2 weeks, and then the following 2 weeks can be doing the total opposite. So you've got to kind of understand when they're tuned a little bit, and they are tuned somewhat at the moment. So bear that in mind. The oil market is pretty much sort of on track here. This is Brent. Sorry, I don't have the wave count on this, but it's going to get support at this area through here at the 100 through here. So that said, there we've got our first support in here with the Western Texas here. So we're looking for a C wave to come down here in 5 waves. So we're looking for 1, 2, 3, wave 4 to move back up here. Oil moves with stock as well, indices, and then another move down through here. Obviously, this is going a little bit sort of higher. It should pull back 38.2% from that high to that high, and I can see that it's doing, it's moved up a bit high. It's retesting. That's not really a valid sort of trend line there, really. So I'm just going to remove that. That shouldn't really have any power whatsoever. So so we just need to see how it treats the 95 through there, but also this little guy through here as well, of course. So that will be the resistance area through here. If support is found on the 95 here, then we need to call that low in through here with support on the 95, but we'd expect it to follow stock and move up through here and then roll over through there. So you can use, well, above 94, you would use group 1, so 30 and 50 and then 72 through there. So any weakness at that point. So you could say that if 94 became the retested resistance and there's a short trade in there, and you'd be looking for 5 waves down through here. Alrighty, let's look at FX. Okay, for the US dollar index through here, we are looking at, we'll start from low here, we're looking up for wave 1, back for wave 2, and then 5 waves up here for the third wave here. We've been working through the fourth wave through here, and it appears that the fourth wave can get a little bit larger. It may be finished on this low here at 83.50 here, and then pushing higher for here. We don't expect the fifth wave to be, very long, because the extension's in wave 3 here, so that means that wave 1 and wave 5 will be roughly the same size. And I do wonder, now that we've made that new high here, if we've actually got that that fifth wave in through here. So, well, basically in here as wave 1 here, and then we've got the wave 2 through here. So that's, pulling back, in this one here pulling back in through here, back into the 85 here. So that 83 50 is going to be quite critical here, as you can imagine, that load through here. So that's something that we'll be sort of watching through here. But what this does, I mean, not many people sort of trade this as such, but when it comes to the euro, it's going to leave a couple of options there. Well, in fact, three options. So the first one would be wave 4's in place here, and this would be wave 1 here, and this would be wave 2, and then we would see wave 3 come down through here as such, like this, okay? And then 4 and 5. If that's not the case, and then wave 4 is not completed, then we would see this move just above here, and then we'd have to put wave 4 here, and then we would see wave 5 start its little process to the downside through here. So that's another option there. The third option would be a triangle pattern developing as well. So the triangle pattern would be on this trend line through here. So we'd see a move up into this trend line through here, and then we would see a move down through here because this would be wave A, B, C, D, and then wave E would come into play here as well, back into this trend line through here as the completion of wave 4 here in terms of triangle patterns, because wave 4s are created in wave 4, and then wave 5 down through here. So that's an option as well. So we just need to see how this plays out, and obviously it's in tune with it's correlated with equities as well at the moment. So we should be able to bunch all these together a little bit and move with that. So let's just see how weakness comes in terms. So look, the 129 as a retested resistance would be the key to seeing further downside through here as well. So yeah, look, it's pretty much the same thing here on the hourly through here. So down for 1, back for 2 here. This looks like it's got support here, so we could see a move up through to the 129.72 sort of area through here. The 61.8 retracement level, not that it's a big deal, is there already. So let's just have a closer look at this structure moving up. So, I mean, this is all positive wave structure moving up through here, and this has now got support on through here. If this was trading hours and some volatility in, I'd be taking the breakout of that little high there for sure, with the stop under this here, because it does appear to be 1, 2, 1, 2, 3. It looks like a fourth wave through here. So breaking of even that little tiny high through here, and then adding on that high and adding on that high and adding on that high there back up into this area here would be the trade for that side. So even though we're bearish, this is quite a nice classic trading levels pattern. So there's the 129 through here. Yep. So the arrival, the reaction, the support on group 2 here, micro group 2, the first high above the level into group 3 here, and into group 1, but finding support, and then you can see that there's a correction here on support, and then the market moves up a little bit. You just need to put the stop, below here, so to speak, and it's trying to find support on top of micro group 1 at this stage here. So yeah, looking rather positive. It's dragging its feet a little bit, but obviously it's the end of the session as US is on close. So but yeah, anyway, so that you trade long from that point there. Yeah, same with here as well. Take the high there, because the most successful, well, one of the sort of most common successful trading aspects is if you've got to move up through there, then you've got, I mean, it's just Dow theory stuff. So a retracement back, and then taking the new high through here, and so triggers the trade there. That's a very successful pattern to trade, and that's exactly what all of these are through here, and this as well. So the Australian dollar. Okay, so We're looking at wave 3 being in place now at 96, and we're looking for wave 4 to move back. Wave 4 would move back to the wave 4 of 1 lesser degree. It's 98 profit-taking number, so it's retesting that supply there. So it will run into that and have problems there. The 38.2 retracement level would be just above the 4 there as such, so it would be more so in terms of closer to 99 basically for wave 4 as such there. So don't worry about those two things. So we're just waiting for that to play out, and then we'll see wave 5 come down, and that should complete the whole sequence to the downside around the 95 there. So wave 4s can get sideways and complicated. They're not normally you don't normally trade them, so unless you're trading sort of intraday as well. So on the 5-minute chart here, I can see that this is got support on top of group 1 here, and just like perfect really, because you got support on top of group 1, on top of the 30, makes a new high through here, just like I explained before. Moves up, and this is just the same thing, a bigger picture, because it's a bigger number at 97, up to 92, whatever. The same thing happening here with the euro as well. So 97.47. So 50 is obviously the big kahuna here. So you need the first high above the level, and then you need the retest. Yeah, the retest, if that holds, then that's the point that you work from, and then it moves up through here, and should take that high out through here in terms of, well, the 1, the 2, the 3, the 4, and the 5 up through here. A move back into 97.20 as resistance, the 72 there at 97.20. Then there'll be weakness in the market from that point there. Alrighty, well, that's it. So the rallies that we've got at the moment that are in indices and currencies and some of the commodities, then we expect them to be just that, rallies, and within 2 days we should see downside there. However, Friday, a strong closing in stocks on Friday today in Australia is likely to see that momentum follow through into Monday as well, so you need to be mindful of that. So intraday we can see upside, but the bigger picture, the next degree higher, would be bearish from that point there. So you need to, as always, choose the degree of structure that you're trading, and then set your parameters up and trading plan up with inside those structures. Alrighty, enjoy the weekend. Thank you for listening.